Hi everyone, Basil Chapman sitting for Tommy O'Brien, and I'm thrilled to say we've got Teddy Kekstadt online. Hi Teddy, how are you?
Hey Basil.
I've been looking forward to, I just, as soon as Tommy said there was a conflict and he had a problem this morning, could I do the show and Teddy will be, I thought great, because I always listen to you. I'm a great fan of your analysis. And I also want to mention the Tiger Forex Report. You want to just briefly tell us about the Forex Report, and then we can go into your analysis.
Yeah, sure. Every week we break down the dollar index, the crude oil market, and the 30-year futures, because those help us guide our analysis for the different major FX currency crosses. We cover the euro, the pound, the Swiss, the yen, the Aussie, the New Zealand, and also the Canadian dollar versus the dollar. And we have some very interesting moves shaping up this week, that's for sure. Especially the dollar's had a huge move since last Friday. It's been a nice little swing trade for the first time of the year, actually.
So, all right, so let's go straight to that. So I'm just showing I don't know if, we can see it right now. I've got the dollar index, which has gone below the 200-period moving average, 105.52 in my the analysis I gave when I gave the start of Tommy's show. I was going through the different indexes, and then I said, as far as I can see, the dollar looks like it wants to go to the 103 to 102 area. What are you thinking in terms of, you said short-term trade, what would be your support level that you'd be looking at?
Actually, that's a really good question. In the Tiger Forex Report, the downside target level that I have, we started taking out new lows over the past 2 days, is actually 103.05. So that's exactly where I'm looking for the market to gravitate to over the next few sessions. The momentum we have since Friday, we had a lower move high, swing high on Friday that was made, and since then the market has gone bearish Monday, Tuesday, and now into Wednesday with more volatility today than it had over Monday and Tuesday. I would say it's a reflection in the area of the ADP number that just came out this morning already, and probably also we're looking at what's about to happen with the PMI that comes out in it's coming out in just a few seconds. So, and then we also have the ISM number that comes out at 9 o'clock as well. These are all numbers.
So But we also have, as I recall, for some time, I'm talking about a couple of years, I've been hearing Trump say we need a weaker dollar. Do you think that's part of this as well, that there's a much bigger influence, governmental influence in terms of pushing the dollar down? Is that
Sure, because that helps our exports. So it's definitely good for us in the short run right now. You got to remember the dollar has been very strong now for basically for a year. So yes. And the reality is that with yields now finally retracting to some degree, that's going to put stress on the dollar. So the dollar needs a correction anyhow, especially because of yields. You have the central bank that has been cutting rates, but the market has been dictating higher rates. So in theory, fundamentally right now, the dollar should be lower than it is right now, just to reflect what the Fed has done, and also the fact that we still think that there's going to be around about a half a point sometime before this year is out. Most likely not until the third and fourth quarters, especially with the way the economic numbers have been going. I mean, the reality is numbers are lagging. The inflation numbers aren't going to start to baseline and then maybe start to shrink until the summertime. So that's why we're probably not going to see the Fed do anything, but the market has gone the opposite way. We've had multiple rate cuts, in the last 8 months, and where are yields at? You see what I'm saying? So now they've been pulling back, but they still have a ways to go yet. In fact, I'll pull up the just to give you an eyeball on that, how much more I think we have as far as room. Now, you got to remember, we've already had a nice move over the past couple of days in the dollar, but if you look at yields, they did all their movement about a week and a half ago. Over the past few sessions, actually, yields have basically been going like this right now. So we've hit the upside correction band that I have in the Tiger Forex Report. We spiked high at the upper barrier of it yesterday. And if you look at on the daily chart, the 10-year and the 30-year, the bar, actually, that's a bearish engulfing line. So even though yields are coming back, meaning going down higher in price today, I think that's just a profit-taking move after yesterday's sell-off. So yesterday's high is key. If we rally above that, if we breach through that high, then obviously higher move highs are the call. Yields are going to go down. However, if that high holds this week, we have a good chance of actually seeing yields go up over the next couple of trading sessions. And I think the numbers today could be the catalyst. If ISM comes out and PMI come out in the sense where yields all of a sudden are going to stop pulling back, well, then we could have a sell-off. And then, but this would be something like we're making higher move highs and higher move lows. So right now we just possibly put in the short-term higher move high yesterday. We're going to see a pullback over the next couple of sessions, maybe about a handle or two. We're not talking about a major move. I would say maybe take out the lows that we've been treading over the past couple of days, by a half a point to a buck in the bond and the 10-year market. So it's not relatively that big of a trade, but that would also mean that the dollar would start to pause this falling down that it's doing over the past few sessions. So be cautious with this rally. Like if you're bullish now, the euro US dollar and the pound saying, hey, look at this breakout, I'd be careful that you're buying into higher move highs before the retracement comes, and that could easily happen over the next couple of sessions.
Okay, very good point. So is there anything in particular in the overall, the macro that you're looking at that you think is pertinent to maybe the next month or so?
Oh, absolutely. Crude oil. Crude oil is huge because not only will that affect the U.S. dollar Japanese trade, okay, that's also going to impact fundamental economics. As crude has already been trading at least in a steady range trade now for the past few months, and it's been trading at the lower end of pricing where it's been for the past couple of years. So, in the fact that we're actually trading in this, lower 70s to upper $60 handle is huge in crude oil. And with the lows that we took out, like this is a big move. I had it in the Tiger Forex report for this week that we would probably be looking for newer move lows. Today we're falling apart. We're at $66. So this is my downside target for crude right now in the report is at 63.31. So we have about $3 more to go, I think, as far as breaking the oil, which would be nice. I mean, obviously it would be good at the gas pumps,
Yes.
If you look at where we're at right now, we set the last major swing low was on November 18th of last year. Okay, and that's where the low was at 66.53. Right now we're trading right now at 66.40. So that's huge. This is critical support where we're at. If we fall below this now and close below it, especially over the next couple of sessions, 63.30 is not that far away. It's a very rational price target, which would be nice at the gas pumps too, because we might see another 25 to 30 cents of a break in pricing at the gas pumps. But this is also good for transportation costs. No matter what, transportation costs, there's no longer this volatility that, they're not worried about diesel and gas going up in price radically right now. Not at all. Nobody's in their business forecast and in their planning. As long as this stays stable to lower, baby, it's going to be good for the economy.
Well,
and the U.S. dollar.
That's a fabulous analysis. I really love it, folks. The Tiger Forex Report, Teddy Kekstadt, always a fabulous listen to whenever we get that interview with Tommy, and I'm proud to be able to do it today. Thank you very much, Teddy.
Thanks,
that was terrific.